Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu, and we've got longtime fools Travis Hoyam and Lou Whiteman giving a 1 to 10 rating to digital imaging and engineering systems specialist, Teledyne Technologies, ticker symbol TDY. I don't know what that means either. First, we'll rate the strength of the business, including factors like industry and competition. I think Lou's going to tell us a little bit more about that so we understand. A 10 is invincible. A 1 is hopeless. Travis is at a 7. Lou, you're at an 8.
Yeah, so to kind of make less fancy about it, this is a sensor business. They make a wide range of sensors, including camera sensors, for a huge range of industries. Its roots are in aerospace, and among aerospace component companies, I would argue that Teledyne is uniquely positioned maybe to benefit from where the world is heading. Their strengths are where there is demand right now. Their space business provides much needed components for a lot of players, both in the US and in Europe. On the military side, their tech is going to be all over the talk of this new missile defense system and the sensors needed there. They're also big in digital imaging, which touches all sorts of industries. I'll ding them a bit for being a component supplier, so they don't really control their destiny. They're subject to the whims of the customers they serve. But among component suppliers, this is a really great business and is worthy of an 8.
Yeah, I was just a tick lower than Lou, but I agree with a lot of what he said. If you want to think about it like a picks and shovels kind of play in advanced robotics and kind of the advances that we're making in autonomy and all kinds of different industries, they kind of play in all of those industries. You can just look at their website, really, really cool sensors and products if you just want to kind of have some fun from an industrial side. The question that I have is kind of what the cost trajectory is and the competitiveness of the business overall. This is one of those businesses that volumes could go up dramatically, but that could be in part because the cost of a lot of these sensors is coming down. So is that going to be kind of a yin and a yang that makes the financials of the business maybe improve a little less than we would like? That's going to be something I'm going to be watching going forward.
For management, a 10 is Warren Buffett. A 1 is Homer Simpson. They flip-flop. Travis is at an 8. Lou, you're now at a 7.
Yeah, I'm at a 7 basically just because Edwin Roque has only been CEO since late 2023, so he's not been there too long. But look, he does have a long history with the company. He joined as part of an acquisition back in 2011. He's a scientist by training. They have a history of having CEOs who are engineers and scientists, which I like for this type of company. The guy he took over for, Robert Meberman, he was a bit of an empire builder. There is this tradition of building through acquisitions. The culture here is to take big risks, and it has largely played out, and I expect Roque and his team will continue that. But look, when the culture involves a lot of risks, I can't go much above a 7.
Yeah, a little bit to be determined, but I do like the pedigree, and over a decade of experience, I think is probably the right move in this kind of an industry. You don't want necessarily too much of an outsider. So I basically agree with Lou.
Financials, a 10 is a fortress. A 1 is yikes. Travis is at a 7. Lou, you're at a 6.
Yeah, so, Teledyne built itself on acquisitions, and the scars show up on the balance sheet. Goodwill and intangibles, they make up about 70% of total assets. There's about $2.8 billion of debt in this balance sheet against only like $500 million in cash. A lot of that was the FLIR deal, the last big deal they did. It's manageable. The company has decent cash flow, so I don't worry about the financials here. But if you're looking at a company and its strengths and weaknesses, I don't think the balance sheet, the financials, are the strong selling point about why this is a good investment.
Yeah, $1.1 billion in cash flow over the past year. They have been paying down some of that debt. So I agree that the debt isn't really a problem. Balance sheet isn't a huge problem. Probably be more of a valuation question, and we'll get to that next.
Great segue, Travis. Let's talk about that valuation. How well will Teledyne stock do over the next 5 years? How safe is it? 10 is a sure thing. 1's a lottery ticket.
I gave it a 0 to 5% from a return expectation standpoint, and that's just partly because of the valuation that you're currently paying for the stock. They have grown through acquisitions, so their 10-year compound annual growth rate is about 10.5%. So you're really in the single digits for growth for a company that you're paying a pretty high multiple for. So I just think set those expectations a little bit lower. Safety score, I went with a 6 for just very similar reasons. A lot of valuation questions. Doesn't mean that the business isn't amazing, isn't heading in the right direction. I just question how much do you want to pay for it?
So, Travis, those are all good points, but here I'm going to give you the bull case, and it'll probably end up somewhere in the middle. What I see is a company that's had a lot of drama of late with a big acquisition and a CEO change, but over a 10-year period, Teledyne has doubled the S&P 500. I said at the top, I really think they are well positioned to respond to where demand is moving. I don't worry about future demand. Some of it may be a risk of commoditization, but some of it, especially on the aerospace side, I don't think there's much risk there. So I don't think this is an overnight double or anything like this, but I think Teledyne is set up well to easily beat the market over the next 5 years. If the market is, 7 or so, I'm going to go 15 plus. For safety is 7 just because there's so much demand on the horizon for what they sell. I think that there is some protection on the downside.
Topic time, Travis. Is there a company in Teledyne space that you like more?
To keep with kind of the companies that are actually using these sensors to build applications, maybe a little bit better margins, maybe a little bit bigger market, Mobileye is the company that I'm looking at in autonomous driving. Not a company a lot of people are talking about, but really moving forward in the non-Tesla autonomous driving. Actually have vehicles on the road with Volkswagen, Audi, a bunch of partnerships. So that's one to keep an eye on.
I'm going to focus on the core business and the business that I think can drive the returns, and that's aerospace. And there, a company I'd look at would be L3Harris. LHX is the ticker. I don't think this is a one or the other. They do slightly different things, but they're both big in the defense electronics and sensors. L3Harris, a larger company, more diversified, same sort of sweet spot I was talking about. There's pros and cons to each. I don't know if I like it better, but I think it's another worthy option to consider.
No one mentioned Spacely Sprockets, but maybe next time. Thanks to both Travis and to Lou. They've given Teledyne a decent overall score of 6.9 out of 10. Lou is the bull, Travis is the bear on future returns. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Old Dominion Freightline. Till then, Fool on.
So how loud was that blender?
I could hear it, but I think that's something that could be edited out. Or
Okay.
Financials is 10 is a fortress, a 1 is yikes. Travis is at a 7, Lou, you're at a 6.
Yeah.